Ladies and gentlemen, welcome back to the channel. We had a weird day in markets today, okay? Let me just be honest with you. We started today with stocks under a lot of pressure, recession fears screaming in this market. By the end of the day, we ended with a sense of maybe optimism that the government will reopen soon. Now, I'm going to share with you the latest developments on this situation and ultimately what happens when the government does get funded and why I actually think the government is probably going to open sooner than what most people are expecting. See, if my math is correct, we are on day 38 of the government shutdown. It might be 39, semantics, okay? Well, it doesn't matter. This is the longest government shutdown in the history of government shutdowns. And most betting markets have the government being shut down about 50 days as of now. I think we might actually get the government reopening by Monday. And I'll talk about why that is in today's episode. And I think stocks are kind of telling you that at the same time. Now, beyond that, when the government does reopen, why do I still think we're going to have a year-end rally? This is screaming to me, okay? And I want to share it with you in today's episode. Could I be wrong? Of course. But I think we're going to be correct. Do me a quick favor, hit that like button as well as subscribe to the channel if you have not done so already. Check that link out down below in the description of today's episode if you guys want to come join the trading community as well. Now, we're also going to talk about Tesla stock, what happened today, and what could be coming next if my kind of plan that I think will transpire actually happens. Do we get a rebound in Tesla or do we get a continued sell-off? I would say a rebound, but we'll discuss that in just a few moments. With that said, let's get started. Okay, so I kind of gave you a little bit of a preview already. We started the trading day today. Markets were not looking good at all. And certain areas still didn't look good into the end of trading. The NASDAQ looked worse than small caps. Small caps recovered quite a bit. You did go from a general recession, panic, pessimism state in the morning to more of a, we might actually get a resolution to the government shutdown soon. Now, from what I can tell, that hasn't happened yet. From the headlines, it doesn't necessarily look like too much happened. But both sides are starting to talk. Okay, Democrats put a proposal together to vote on. The Senate, which is Republican held, said, yeah, that thing's dead on arrival. But that's more conversation than we've had in a very long time on actually getting the government reopened. Okay, so I think that's where even some of the general sense of optimism came from today. Now, the government shutdown, you have to understand this. It's really not good for anyone at this point. But let me give you a secret. It's worse for Republicans. Because ultimately, when bad things happen, who do people blame? They blame the people in control. Even if it has nothing to do with the people in control. Even if the Democrats want to keep the government shut down for their own reasons. Okay? Who gets blamed? Trump, Republicans. It's not good. The more damage that is done to the economy makes the situation even worse, because then you're starting to really hurt people. You're canceling flights, people can't travel, you're not getting paid, food stamps are in question, and really the government shutdown, you want to think of it like risk reward, okay? Like, is the reward of, getting no ACA credits or whatever for Republicans better versus economic harm? a possible recession. Like, the possible recession is far outweighing the benefits of the ACA credit situation, which is holding up the government from reopening. Okay, so from a Republican perspective, you're in a losing position right now, because you're going to be blamed for the government being shut down, no matter if that's fair or not. Okay, so the risk reward is really starting to, at this point, heavily skew towards, hey, let's mitigate the damage here. Let's do some damage control. If you're a Republican, you're saying, hey, you know, the better of two evils is to just maybe give the Democrats what they want a bit, come to a deal, and get the government reopened. Okay, so that makes a lot of sense to me. Now, from a market perspective, the rally into the end of the day today suggests that someone may know something. Okay, that someone may know that the government is going to reopen, because let's face it, today we did not get the jobs report, but estimates had negative 60,000 in the cards for the jobs report today. That is a very much recessionary number. You heard from Scott Bessent today and Hassett that said there's a lot of economic damage being done, and it's going to weigh on third and fourth quarter GDP. That's really not good. So it's like, when you start to weigh these things and compare them, it makes a lot more sense to just get the government open at any means necessary. Okay? The economic pain and what will be political, weakness on the Republicans' part, it just makes sense to come to an agreement to get the government reopened. Okay? At this point, it makes zero sense to continue to keep the government shut down. And I believe, based on the end of the day market reaction we had today, it is highly suggestive that the government is going to reopen, probably by Monday. Now, we'll see what happens. The Senate's going to go on a recess over this weekend. But if the House does come to an agreement, if there is something put forth, the Senate will come back over the weekend. So it is theoretically possible that the government reopens by Monday. Now, what you also need to know, and why I think we're going to have a year-end rally, there's a couple of reasons for it. But first and foremost, again, the expectation for the jobs report today that we did not get was unemployment to go from 4.3% to 4.5%, so a big jump in the unemployment rate, but also to have a negative 60,000 jobs print. I don't think the jobs number was going to be great today. You weren't going to get 50,000 job ads, most likely. But I don't think it was going to be nearly as negative as that. 60,000 jobs? Are we serious here? You're basically in a recession at that point. Okay? The problem is we did not get the jobs report. The problem is we just don't know, what the number is. When the government reopens and we start to get the economic data, I think that it's going to come in better than expected. And when the bar is 60,000 negative jobs in a month, you have a very low bar, okay? The way you disappoint markets is coming in at negative 70 or negative 80,000. And that's a real shit show, okay? Like, markets are going to fall further from there if that's the trend, the trajectory that we're on in the economy. Okay? Now, if that were to be the case, if we are hemorrhaging jobs, then the Fed's going to be cutting rates more aggressively and blah, blah, blah. And there's a little bit of a bullish offset to that because the Fed would be cutting rates. The problem is we don't have economic data, so a lot of Fed officials don't want to cut rates with the uncertainty because we just don't know how the economy is doing. But again, with so many people so negative on the economy, it wouldn't take that much to get an upside surprise. Even at negative 30,000 jobs would be seen as a positive surprise. if the expectation is negative 60,000. That would be seen as really good news, let alone a slight negative jobs report or a slight positive jobs report, something like that. Okay, so I think once the government gets reopened, that is a positive catalyst for markets. But I also believe once you start to get the economic data, even if it's not good, it's likely to be better than the estimates that we have right now. And that sets you up for a year-end rally in markets. So, part one, government reopening in and of itself is positive. Damage mitigation, less of a risk of a recession. Okay, that's number one. Number two, when the government reopens, you start to get economic data that I believe is very much set up for positive surprises. I don't think the economy is as bad as negative 60,000 jobs lost last month. Things may not be great. We may not be selling rainbows and chocolates and singing kumbaya with your fellow folks, but 60,000 jobs lost in a month, that sounds pretty damn aggressive to me. So I think there's upside surprise to the economic data that we will be getting once the government reopens. But number three, and it kind of goes along with these two, is the markets are so bearish right now that these first two things happening alone are going to cause a upside rally in this market. Okay, look at the CNN Fear and Greed Index. CNN Fear and Greed Index is coming in at 20. Today it hit a low point of 16, I believe. You are in extreme fear. All of your categories, market momentum is fear, stock price strength, extreme fear, stock price breadth, extreme fear, put and call options, extreme fear, market volatility is neutral, safe haven demand is fear, junk bond demand, in extreme fear. Your AI investor sentiment survey shows 38% of investors are bullish, 25.8% are neutral, 36.3% are bearish. These are not great numbers. Mix that with a Fed that is nervous about cutting rates, which you get the government reopened and the economic data, reaffirms that, hey, things are not great, okay? But they're not terrible either. Likely gives the Fed more confidence to start cutting rates. I don't believe inflation. Inflation cannot thrive in a labor market that is hemorrhaging jobs, like the estimates, okay? But the Fed's recent comments and the uncertainty is keeping rate cut odds from really solidifying for December and for January. For January, you're technically pricing in a pause after a cut in December. But, if we were to actually be getting like 30,000 jobs lost or even 10,000 jobs lost, but inflation is not nearly as hot as, Wall Street is expecting, you would probably start to price in a cut again December 10th. We already are, but the odds would be further solidified. And then probably you'd go back to pricing in a cut for January. Now, if things are really bad, you might get the Fed that starts QE, maybe a 50 basis point rate cut spread in here. Again, we don't know because the government is shut down. But Wall Street has recently capitulated. There has been a lot of fear in this market with Wall Street, fearful, but retail investors that sentiment levels haven't been this bad. I mean, even back in April, it didn't feel like sentiment was this bad. People are scared. People are just in the last couple of days, like asking if they should go into cash, it's probably too late for that unless you are dead set that a recession is coming, right? So when people are so washed out, when sentiment is so bad, you're very much set up for an explosive move to the upside. Now, you can even see with the VIX today. The VIX, you can see the VIX today was up to over 20. It actually closed the day at down almost 2%, but still sitting at 19. So there's still quite a bit of fear out there. Now, the NASDAQ closed lower today, capping its worst week since April. Things don't look great out there. Okay, you can even look at indicators on the small caps. RSI at 46. Let's take a look at the NASDAQ. RSI and the NASDAQ at 47, so things are pretty negative. But if you look at internally in this market, and they're all below 50 for the SPY, NASDAQ, and Triple Q. But if you look at the RSP, which is the equal weight S&P, that RSI is at 47 as well. But internally in this market, you've been washed out, right? AI stocks, small caps, like, it has been a rough last month or two. Now, for Tesla stock specifically, even though Tesla is not like super washed out or, hasn't really been going through this major crash, yeah, sure, you've come down a little bit from about $474, which is actually quite a decline from the high at this point. Down about 9%. At the low of the day today, you were down about 11%. I think, again, all of these principles apply to Tesla in kind of an amplified way because the AI market is still very much alive and well. Tesla, as Wall Street still views them, is very much a car company that is very impacted if a recession were to hit. So, that turns into a very much positive catalyst when we start to get better economic data than, Wall Street has been expecting. Okay, when the economic situation looks better, Tesla is going to benefit from that. But to state the obvious, the biggest catalyst for Tesla recently has been Elon's comp package. Elon is now guaranteed going to be the CEO for the next 10 years with ambitions to drive Tesla to an over $8.5 trillion market cap. We got a lot of good news at the shareholder meeting that the stock just did not react well to. And it's because of what's happening in the broader markets. But when you get the government opened and this year-end rally begins, you're going to see Tesla explode, okay? Even Tesla's RSI is at 47. Now, you also seen on a technical basis today, the 50-day moving average is at about $421 per share. Tesla stock bounced at $421.88. So you technically held support at the 50-day moving average. You did not quite fall below that today, and Tesla stock bounced almost exactly when you hit the 50-day moving average. Like, that to me looked really good. And I think Tesla is set up for some pretty large upside into the end of this year. I think Tesla stock has been discounted for a long time because Elon could leave at any moment. Now, you get the government reopened. Elon's comp package was just approved. We're going to be getting some robotaxi news here soon as well. Elon and Tesla say that robotaxis are going to launch soon in Miami, in Dallas, in Phoenix, and Las Vegas. We have some positive catalysts coming. The end of the government shutdown coming. Maybe fears of a recession dying down, and hopefully inflation coming down as well, which fuels more Fed rate cuts. And there is a pretty optimistic scenario ahead for Tesla. Now, the biggest risk at this point is, sure, government reopens, maybe it doesn't, but let's say the government does reopen. Like, again, you're getting to the point where it's a little extreme. The government needs to reopen. Democrats, Republicans, nobody is really benefiting from this, especially Republicans. Like, Republicans are not benefiting from the government being shut down. I don't know if someone needs to tell them this, but people are going to blame Trump for not giving out food stamps. People are going to blame Trump for their flights being canceled. Okay. You think they would know these things. Again, one of the biggest risks, though, is the government does not reopen, which is obvious at this point. The second biggest risk is that maybe the government does reopen, but maybe the economy is already in a recession. Maybe I'm wrong. Maybe, like, my little world and bubble that I live in is not representative of the larger economy. I don't think that's correct because why do you think we don't have recessions anymore in this country since 2008? It's because largely the internet, the economy is very diversified, okay? Even in 2008, like, those were baby days of the internet and technology in general. Today, there's a lot of different interconnecting moving parts of this economy. To really have a recession, you need many industries to go into a recession. You can have a couple in a recession at the same time. You could, like, we had housing, semiconductors, all in a recession at the same time in 2022, early 2023. You still didn't have a recession, okay? And that was before the AI boom, okay? Well, you're going to have to see many different industries in a recession all at the same time to get a kind of broader macro recession in this country. I don't think that is happening right now. I actually think the consumer is going to get better into next year. Big, beautiful bill, all of that. That starts to kick in around mid-year next year. So I don't think we're currently in a recession, but that's the risk. If we are in a recession, stocks are going to crash so hard from here. It's going to be stupid, okay? But I don't think we are. And that's the real question you need to ask yourself is, are we in a recession right now? And I just don't see it. So let me know your thoughts on this down below in the comment section. Again, I think Tesla could be, again, still a $500-$600 stock by the end of this year, as long as we're not in a recession. Like, if we get the government reopening and the estimate was 60,000 negative jobs for today, but let's say the number was actually 100,000, you're not going to get a raging bull market into the end of this year. Sorry to burst that bubble. But if maybe the jobs report today was going to show negative 30,000 or negative 40,000 jobs, that's still an upside surprise, and that would be positive. And that would likely lead to a bit of a rally. So, again, let me know your thoughts on this down below in the comment section. Hit the like button as well as subscribe to the channel if you have not done so already. Check that link out down below in the description of this video as well if you guys want to come join the trading community. But with that said, have a great rest of your day, and I will see you in the next one.